I want to see if Nasdaq leaves this fair value gap open, or I say this all the time, at least the upper half. If we do that and start to break lower, to me that's signs of bearish order flow. Right here, we had this breakaway gap. We trade up, we fail to reach consequent encroachment, and also making a mental note of how we fail to reach that 130 opening price. So we get up, we can't get above 130, can't reach consequent encroachment, and we break lower. To me, that's heavy, that's bearish order flow. Now I'm watching this fair value gap here. Preferably, you want to see that stay open, but if we do trade up into it, I'm watching to see if we leave the upper half open. It's a bearish order block. But that repricing all the way through this fair value gap shows me that price isn't as bearish, as strong to the downside as I would like. To me, that's kind of like a warning sign, proceed with caution. I'm looking at the clock. We're in that 2 o'clock macro. My thought process is in the next 2 candles or so, I want to see some kind of movement, because we have $150 to 210. So this is your macro. Okay, during that 20-minute window, you want to see some kind of displacement. You want to see movement. You want to see the algorithm start to spool price in a certain direction. That's the displacement we're looking for. Right at 210. Perfect. Perfect. Now I'm watching to see if we can stay heavy here. This candle here, exactly at 210. These 3 consecutive up close candles, treating that as one bearish order block. I want to see if that can offer resistance. I don't want to see us continue to consolidate here. That's possible, but I'm watching the low of this candle all the way up to the opening price. That's your order block. You want to see that offer resistance. So zoom in here. I'm going to drag this down. Look at that. We open on this candle, trade up to the low of the order block, getting displacement. Now targeting, assuming Nasdaq wants to continue lower, I'm taking this range from this low all the way up to this high. You want to target discount PD arrays. So if you look in this price leg here, what is the first discount PD array that you see? My eye immediately jumps to this fair value gap right here. That's low hanging fruit, easy objective right there. And then what's next? If we were to trade down to inside this fair value gap, what's something we could reach for? This low is pretty obvious. That's sell side. We have sell side here, and then sell side at the bottom of the range. Now when this fair value gap forms, I'm going to take this order block off. I want to see this higher fair value gap here stay open. This fair value gap up here, that's the fair value gap that I want to see send price lower. We consolidate, 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 boom. That first fair value gap in the direction of our bias, that leads the consolidation. I'm treating that as a breakaway gap. So my focus is in this fair value gap here. I want to see that take us lower into our discount, buy side imbalance, sell side inefficiency down here. That's best case scenario. That's ideal. So all my focus is right here, expecting this fair value gap up here to not be traded to. GU trading lower, equal lows. Yeah, I believe everything's going lower. Let me see. I'm not really looking at my monitors right now. Dow, dollar, slowly working its way higher, but not really too clean. Nasdaq looks heavy. S&P, Forex breaking lower just a tad bit. Pound dollar, not the cleanest, but we don't have any news driver today, so gotta take that for what it is. Again, I want to see this fair value gap stay open. So this is how, again, I always like to kind of keep this in the back of my mind, but this is how I frame power of 3 in between sessions, silver bullet hour. So 2 o'clock to 3 o'clock, that's your silver bullet hour. We have our opening price at 2 o'clock. Accumulation. We rally up from that 2 p.m. opening price. That is your manipulation, Judas swing. And then I want to see a run lower, distribution, and then close somewhere near the low between 2 o'clock and 3 o'clock. Not saying this is going to happen, but this is my thought process when I'm trading these sessions. Ideally, best case scenario, it will look something like this. We open at 2 o'clock, we rally up, bearish order block, fair value gap, rally up again, fail to take out this high, so we're working in a premium. Okay, I'm seeing that as a Judas swing. People are chasing that going higher. We break down, breakaway gap. Again, I'm looking for this discount fair value gap down here. And in my mind, I'm watching to see if we can frame this power of 3 in this hour between 2 o'clock and 3 o'clock. So I'm looking for this setup to form. Dollar index looks really strong. Buy side, want to see if we can tag that. Also have buy side above this high here. So higher dollar, I prefer to see lower prices in S&P, Nasdaq, and the Dow. Repricing to the high of the fair value gap, that's fine. Breakaway gap, want to see that stay open. We could work in this lower one, not a problem. That needs to stay open. But a lot of people who like trade optimal trade entry, this is when they often miss out on setups, because I used to trade optimal trade entry and I'll always wait for price to come back to your 62, 79% retracement. But as your understanding of price action grows, then you'll realize you don't want to see a retracement that deep in terms of breakaway gaps. Okay, so there's narrative, there's a reason why. Sometimes you get filled on your optimal trade entry, sometimes you don't, because if the logic is we have a lower fair value gap down here, we want to see that offer resistance, we want to see this one stay open. So I don't want to see us return back to 70% retracement. This is when, if we were to take out this low, that's when you would take a partial. Okay, run down some of your equity, assuming in hindsight, let's say you shorted this fair value gap, or you shorted one of these fair value gaps here. If price were to run out this low, you take a partial there. You take off one of your contracts, run down some of your equity, because there's sell side being generated. This low here, as we take that out, we just ran out sell side. We form this low here, move away a little bit. If we were to drop down and take out that low, that's sell side. You should be taking partials there. But admittedly, this price action is kind of sluggish. Saku Trader, Statics, Brian, who else did I miss? Kid Rocks. A lot of new names. I love it. This Discord is growing. I used to greet everybody who joins the Discord in the chat room, but it's got to the point where I can't really manage it all. But if I didn't give you a warm welcome when you first joined the Discord, just know I'm glad to have you in here. We're all glad to have you in here. Okay, so if we were to take out this low, that's a partial. That's an area where you want to pay yourself. And then I'm also watching, I want speed here as we rip through that. Okay, I don't want us to take out this low and stall around. I want fast, large, down close candles, ripping through that, and then getting our partial discount BISI down here. So I'm watching how fast do we take out this low if we do so. I'm not saying that it will, but if we do, I'm watching the speed and the magnitude at which we do that. So pay yourself here, partial, and then watch how fast do we take out this low. But this is signs of bearish order flow. Why? We worked in this lower fair value gap, not trading to this one here. That's a breakaway gap. That's exactly what we want to see. Exactly what we want to see. Are you ICT direct student? No. I'm not an ICT private mentorship student. I didn't start studying ICT till January of 2023. Straight from his YouTube 2023 mentorship playlist. That's pretty much all I really did a deep study on. That right there should be a partial. You should be banking something right there, taking something off. Again, the logic still stays the same. I'm treating this as a breakaway gap. You want to see that stay open. And same thing I mentioned here. I want to see speed underneath this low. I want to see us rip through. I don't want to see what happened here where we take out that low by a few ticks and then we retrace. I want to see us take out that low and rip through it. This is fun. I love doing this. Like, you don't have to be pressing buttons, making money and all that to have fun trading. Like, just reading price action and working on your skill set, tape reading, is fun. Like, I actually enjoy this. Nasdaq is consolidating like a dog. It's brutal. Time distortion. 2022 mentorship is good to create a model, but core contents will help build a narrative, even if it's old stuff. I didn't study the 2023 mentorship. Way less popular amongst his followers. Might be the one with the best gems. See, that's the funny thing. I was going through the core content because I was going through everything from ICT. Like, I was just bored one day. I was like, you know what? I'm just going to study every single thing ICT has on his YouTube channel. So I went to the store and bought a notebook. I was starting with like the Market Maker Primer series, the Scout Sniper series, all that stuff on his YouTube channel. And I was going to go through all his core content month 1 through 12. And then right when I was about to do that, he dropped the 2024 mentorship. So like, all right, bet. I'm about to put all that to the side and just lock in on the 2024 mentorship. And then when he finishes that, I'll go back to studying his old stuff on his channel. But you don't have to do all that though. I enjoy studying and taking notes and all that. But like, all you need is a model and know how to read price action, and you'll be set. I'm just trying to be like a freak with it, to be honest. But you don't have to do all that. Like going through all his videos, it's not necessary. All right, I'm watching C. I want to see speed through that low. And again, if we take out that low, that's a partial. Run down your equity. All right, so assuming, let's just say you went short 3 micros here. We get this low. We retrace. We run out that low. That's a partial. You have 2 micros left. All right. Trade down. We leave this low. Trade up. Trade down. Partial. You have 1 micro left. We form this low. Move away. Trade down. I would just cut my trade right here and forfeit this lower PD array. That's how I would do it. If you're comfortable holding out full pool from this fair value gap to this discount fair value gap, nothing wrong with that. But me, the whole point of trading is to put money in your pocket. So there's nothing wrong with taking partials. That's literally what we're here to do, get paid. All right, so right there, that drop underneath that low, you should be taking something to the bank. We also reach a discount market. Okay, between this low and that high, equilibrium, traded down to equilibrium, and a discount taken out sell side. So you definitely should be paying yourself there because this right here isn't guaranteed. We already traded down inside of a discount and we've ran out a lot of sell side. So you can't be demanding of this right here. We're about to wrap it up. It doesn't look like Nasdaq is going to give me that discount fair value gap, but this was a good study. This was a lot of fun. I think that's it, man. Paid members webinar tomorrow, 10 a.m. sharp. Bring your pencils, load up your trading view charts. We got a lot to study. We're going to be in there for an hour, get in, get out, and we're going to enjoy our weekend. Everyone else, free stream again Monday morning. Hope to see you there at 9:30. It's going to be fun, bringing price action. And that's it. Have a great weekend. Love y'all. Appreciate you tuning in. Subscribe to the YouTube channel if you haven't already. I just posted a trade breakdown video if you missed it. It's pretty insightful. It's good stuff. Love y'all. See you in the market tomorrow. Not tomorrow. Monday at 9:30. All right? Peace.